Hey guys, it's Zach. I will be predicting the potential price of NIO stock through March. There are 4 huge catalysts to keep in mind so that we can know when it is best to buy NIO for you, depending on your investment strategy. Today, we will be discussing how I predict NIO stock will potentially respond to the catalysts of inflation, geopolitics, the Fed interest rate hike, and NIO's delivery numbers. Stocks tend to retreat when geopolitical crises dominate the headlines. This is because of the uncertainty these geopolitical crises present in the markets. This uncertainty is generally situated around interruptions in the global commodity supply chain. The best parallel of what could possibly happen in Ukraine is what happened in the 1970s and early 1980s when geopolitical shifts and 2 oil shocks caused, in part, soaring inflation and multiple recessions. Russia is a nuclear power engaged in aggressive action against Ukraine, an independent country that is supported by NATO. Therefore, it is possible that this conflict could result in a Cold War or something much worse. Fortunately, the risk of this happening is negligible. Therefore, I believe once this crisis does not dominate the headlines, I foresee NIO stock price recovering to the high 20s within the next few months. Considering this, I have seized this opportunity to buy more NIO stock. The next huge catalyst is the ES7 unveiling in April. NIO did not present boosted delivery numbers on the 1st of March because there won't even be ET7 deliveries to account for until April, but April will be the unveiling of the ES7. However, if we start to see the FUD decreasing, we may see NIO stock rally, followed by momentum buying following into the new ES7 unveiling may lead to a second rally, which could lead to deeper momentum buying. If this does happen, we could easily see a return to the mid to high 30s by May. This estimate is fairly conservative, thus the share price could go even higher. The Fed is tightening monetary policy, aggressively raising interest rates to fight inflation. Depending on the Fed, we could easily see NIO reach somewhere in the mid-60s by the end of 2022. It will likely follow the trajectory of the broader market as we've seen in the past. This is not good considering we have seen a broad market decline since Q1 of 2022. The Fed is planning at its meeting on March 15th through 16th to start increasing its benchmark funds rate from its current near zero level and then to begin reducing its $8.9 trillion balance sheet. All that is intended to mitigate the inflation that is running at an annual rate of 7.5%, a 40-year high. The higher the funds rate, the lower stock will go, and vice versa. Fighting this inflation, the Fed has managed to spook markets with an estimated 6-time rate hike, according to Morgan Stanley, through 2022. As I'm sure you know, the Fed rate hikes make borrowing more expensive. Thus, there will be a lot less borrowed money in the markets and circulating in the economy. The Fed does not care about the valuation of stocks because the Fed believes this leads to the risks of excessive risk-taking, speculation, and debt-taking, which poses significant risk to the financial system. Since the market is expecting the Fed to aggressively raise interest rates, I do not expect this to be a significant catalyst on NIO's price for the month of March. All this FUD surrounding NIO has unfairly hammered NIO, despite NIO moving further with success after success. There has to be reckoning, and the longer this goes on, the greater NIO's comeback will be. Please remember to like and subscribe for more future content.